Hi, everyone. This is Joanna. I'm a real estate broker in the state of Illinois.
And this is Matthew Bettinger, a mortgage lender in the state of Illinois.
And we bring you up to date every week about real estate market and important things. We were talking last week about, Fed meetings and all of that. And they announced it, right? Some good news for us. And I need you, Matt, to explain that because we had a lot of phone calls and we are happy that you guys calling and asking. But there's something to be said because I feel like media
Sure.
just kind of confusing people, like
Yeah,
even in Polish radio, there was like somebody talking about, hey, call me now, the interest rate is down right now. Well, it's not true. So I need you to
sure.
explain what to
So a lot of
expect.
people don't know the federal funds rate is the rate that banks lend each other money overnight. And so kind of your other financial instruments are based off of that, but mortgage rates aren't directly based off of that. So a lot of people are kind of spreading misinformation and saying, rates went down a half point. It's like, well, the federal funds rate did, but mortgage rates that day actually got slightly worse. So the good news is those federal funds rate cuts do help in the long run, but it takes time to kind of bleed into the market. So the bond market will get positively impacted by the treasuries going down and all that. And so the mortgage rates in turn will start to go down. So it is a good thing. It will impact mortgage rates, but it's not a direct connection. So it's kind of like, painting one room of your house doesn't improve the value. But as you move through, like as it kind of gets in there and everything gets improved, then the mortgage rates will follow. So we will see mortgage rates come down, and they're expecting one cut November, one cut December, a quarter point each, and then four more point cuts next year. So another point next year. So 2 points in total. So that depends on inflation, jobs reports, all kinds of things. But we most likely will see that because you can see unemployment's creeping up. It's at 4.2% right now. If it gets to 4.5, you'll probably even see more aggressive cuts. So this will continue and that will push mortgage rates down, but it's not an instant connection where right away it happens. So I know the media has kind of put a lot of confusion out there with that.
I know it is very confusing, but I don't know if I heard you correct. So two cuts this year and then some more next year. So do they have like a number in mind that they're expecting?
Yeah. Quarter point in November, they're expecting quarter point in December, and then four more 1/4 cuts next year. So a total of 2 points because we've done a half a point, probably another half a point this year, and then one full point next year.
But that's
So
that's a lot. That's so
yeah, that's a
that's a
lot. Yeah.
lot.
Now it doesn't always, like you said, it doesn't mean that mortgage rates will be down 2%, but it means they will be coming down. I would anticipate later in the year next year, you'll see fives. So we'll
Mhm.
probably see 5.875, 5.75, something like that near the latter end of the year. But who knows? We may see even better, earlier in the year. So
Right. I
so
mean,
we're
we
getting
want it
there.
to be this, right? We want it to be
Yeah,
like
and
around 5.5 or so.
yeah, I think that's a very reasonable interest rate. Because we don't want rates to drop too fast because that can drive inflation back up. So they're
Yeah.
cutting very, judiciously. They're being very, careful, which is good. You don't want to cut too fast because that can cause, like I said, inflation to rear back up, interest rates go back up, and we kind of bounce back and forth. We don't want to do that. We want to do it the right way and come down slow. And so we're improving, and it's going to be a good thing. It's just going to take a little bit of time to kick in. So I think we're headed in the right direction.
Perfect, perfect. So what do you suggest for people that are like they're thinking right now, okay, should I buy or should I wait? Because we have those buyers, right? Like they're a little bit hesitant. They
Yeah,
heard that in the radio or TV and they're like, oh my God, I'm gonna wait, another,
yeah,
whatever, 6 months or something.
sure.
But then we can always refinance, correct?
Exactly. I've been telling everyone, it's not a sales pitch. Buy now. I know everyone says, well, of course you're going to say buy now. Honestly, myself, even I would look for property right now because what's going to happen is, logically, just think about it. Spring market, rates are in the fives again, possibly. Every news channel, everything will be talking about it, and everyone will be swarming like, hey, honey, let's go get that new house. We've been waiting. Let's list ours. Let's get moving. So you're going to be competing against a lot more people, which is going to
Mm-hmm.
drive the prices up. So
Yeah.
even if the rates are down at that point, the prices will be moving up. And we've looked at a graph before on the program. It's a much bigger difference to pay that extra purchase price than it is to pay a higher interest rate. So, and like you said, if rates do come down, you can always refinance. So you get the best of both worlds if you buy now, because you can, you've got a pretty good rate now. We're much better than we were. You got the cheaper purchase price. Next year, if the rates do come down, you refi, for minimal cost, and now you've got the cheaper house plus the cheaper rate. So I
Can you
think now
can you
would be the
tell
best time.
people, yeah, can you tell people like what to expect with the refinancing? What is the cost of it?
Sure, sure. So there's normally a lender fee and then an appraisal and title charges. So somewhere in the 2000 range, roughly, and sometimes your lender can work with you to give you a little bit of credit to offset that. The nice thing too is you can usually roll it into the loan. So you basically close and it doesn't cost anything.
Okay.
So it's really nice. I shoot for like a, 12 to 16 month recovery, which means if you save a certain amount each month, you'll have paid the fees off within 12 to 16 months.
Okay, got
So
it. Yeah.
so that way every month after that you're saving.
Mm-hmm.
Because what you want to think is long term, I don't want to refinance if I'm going to refinance again or if I'm leaving this property
Mm-hmm.
because you have those sunk costs and that's going to take a little bit of time to pay that back. But if you're staying in a house 3, 4, 5 years and you get to refi, the way I set it up, a lot of lenders will be a little unscrupulous and throw a lot of points in there and things like that. You need an advisor to explain, kind of strategy. And I like to strategize with everything and say, hey, we could do points. And I know that low rate is really like everybody wants it. But when you break numbers down, look at this, so you don't do the points, you're breaking more quickly. Then if the rates drop again, we could refi and you didn't sink all this money. There's a lot of things to discuss. That's why you call a rocket mortgage, a very inexperienced person, they don't understand anything. They just want
Nobody
to
likes
drive you to,
working with them. People do
yeah.
not do this.
And they're just not an advisor. So I try and be an advisor just like anyone else and give you the information to make the decision simple. Because once I lay it out for everyone, they go, oh, that makes total sense. Why would I do that? Why would I do this?
Right,
What you're saying makes sense.
right.
So it's really a discussion, and we can go through that. Anyone that's looking to refi, I'm always happy to help and take the time to go through a call.
And would you say that because people are still thinking about buy downs, I don't think this is a good time for that because if you're thinking, okay, maybe the interest rate is going to go down next year and you can refinance, why
Yeah.
would you waste money for buying down the rate, right?
Yeah, it really doesn't make sense. And like I said, a lot of the big places where it's just a call center, the first thing they're going to drive you to is they want to win you as a customer. So they're going to try and trick you into a low rate, but you're paying a lot of points, which doesn't make sense financially. Because when you break down the numbers, if you pay a lot of points, your break even may be 4 years from now, 5 years from now. Well, you're not going to keep that loan for 4 or 5 years, most likely. You may refi again, you may leave. I've seen people get pushed to where their break even is 9 or 10 years. And I'm sure you can tell me the average nowadays. I know it's technically usually 6 or 7 years that someone stays in a home.
Correct.
So, you're not saving money until you hit year 9 or 10. Why would you refinance? You would have been better off in your old loan. And that's why you
Right,
need an advisor because they won't
right.
tell you these things because they just want the refi. That's not how I operate. I want to give you a better situation. Obviously, we want to do more refis, but I want to put you in a better financial position.
Right, because I feel like you said something about the advising people. I love this because sometimes people like hear different things here and there, and then
Mhm,
when they are meeting with the loan officer, they're like, "Okay, but make sure I'm gonna get that buy down." And
mhm,
I wished that, that people were actually explaining this better. Like what you just said, let's sit down and make sure that this makes sense.
mhm.
Because,
Yeah.
I was in the same situation too, and I wish that maybe someone explained this to me a little bit better. So I made
Mhm.
a smarter decision about things.
Sure.
So sometimes we just, making decisions like really quick because in my situation
Yeah.
it was like a deal that I had to jump on and the program
Yeah.
was
Yeah.
there. So, but then now after a year when I have to refinance and I think about it, like I'm like, how stupid. Why would I just, you know, pay that
Yeah.
hundred
Yeah.
bucks more? It would be 1,200, not 2,500 to pay. And I will
Yeah.
be refinancing right now and saving money. So you're totally right. And then I can talk
Yeah.
totally out of my experience. Yeah, well,
Yeah.
this is a lot of like super, super important informations. Thank you so much.
Oh, you're welcome. Anytime.
Yeah, so I hope this helped you guys, because like I said, we both had like a lot of calls from you, like being
Yeah,
excited
definitely.
that it's happening right now.
Yeah.
There is a little bit of time that we have to wait, but then again, if you wait for that, I mean, obviously, I mean, I feel like in spring we're gonna have more houses, but interest rate's gonna
Mhm.
be down, so you guys will have more competition. If you find a house that you really truly like right now, just get
Yeah.
it. Just get it and then refinance
Yeah.
later.
Yeah, I wouldn't let a potential, rate drop drive you away from the house that you really like. Like I said, whatever you can do, if you can afford the payment and it's not a stretch for you. Like I said, same thing. I don't like to put people in payments that they're really struggling with. If it's a payment you can afford, you love the house, go for it because you always can refi, so you get the best of both worlds that way.
Excellent. Well, thank you so much, Matt. We see you
Thank you.
guys next week. And have a great weekend and call us if
Have a
you
great
need
weekend,
us.
everybody. All right.
Thanks.
Bye-bye.
Bye.